Welcome to today's hot sheet, where we're going to talk about underwater mortgages again, a reaction from one of the largest podcasts in the country, NAHB Homebuilder survey, as well as housing starts and the weekly unemployment data. Today is Thursday, May the 16th, 2024. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet. Let me know in the live chat which market you're tuning in from today. All right, let's kick it off with more talk on underwater mortgages. I don't want to give this more light than it deserves, but when one of the biggest, the largest and biggest, I guess, podcasts in the country sheds light on it, I think it's important for us to circle back. We talked about underwater mortgages earlier in the week. We talked about the reality of the statistics, but some folks who just don't look at mortgages and housing and real estate all that often, or only grab a headline here and there, can conflate the data. It's when we need to step in, make sure we know what is being said to millions across the country, because those millions could be our clients, could be the people that we're helping buy, sell, and invest in real estate. If you're an agent or anyone who is in the housing market to any degree, you should be aware of what's being said. Because I promise you, the consumers are more likely to pick up a podcast like what I'm about to share with you and take that as gospel versus what you're sharing on your email newsletter and or your Instagram. If it's a podcast that they listen to with millions of other listeners and viewers, they're probably going to lean into that. Or at the very least, they're going to be paying more attention when that content is, when they're consuming that content. So I think it's important for us to bring it to attention. That's why I'm doing it here on today's hot sheet. So if we go back to Monday's hot sheet, for example, we had the Adam data on recent home equity and the underwater report. Okay. The same data was used in this podcast, this Patrick Bet David PBD podcast. Okay. He goes and he starts the segment reviewing a report on U.S. mortgages. It's the report that we looked at on Monday. And on Monday, I said, don't worry about headlines that you see. And next thing you know, Tuesday or Wednesday, I see a big headline on this podcast. I could foresee it coming when seriously underwater mortgages in the U.S. increased technically, that people were going to run with that headline. And here we go. They did. So he starts by saying seriously underwater mortgages in the U.S. increased. Well, that increase was 2.6% to 2.7% in quarter one of 2024. Okay. Now he started to get into some of the locations like Kentucky, 2% to 8.3%, West Virginia, up to 5.4, Oklahoma, 5.5 to 6.1. Okay. States with the highest share of underwater mortgages, Louisiana, they've been higher than the rest here for quite some time. Wyoming, Kentucky, Mississippi, Oklahoma. Okay. So some of the regions that are considered high: Baton Rouge, New Orleans, Jackson, Mississippi, Little Rock, Syracuse. Then states with the smallest: Vermont, Rhode Island, New Hampshire, California, Massachusetts, are the ones with the smallest share. Okay. But when you just look at the whole pie, which is really what we were doing on Tuesday, you see quite clearly that, these are at really low levels. The U.S. homeowner is in a extremely strong position. Okay. An underwater mortgage means that the house is now worth less than if you sold it and you got all the costs, to cover the mortgage and to buy out the mortgage. You have to bring money to the table. Okay. So there's just not a lot of these right now, especially with where equity sits, and certainly with where also where these mortgage payments are at. We also looked earlier this week, people are bringing more money down. Okay. What was unfortunate about this podcast is the reaction to these numbers, to when you look across the country, a very, very low number, a number nowhere even close to 2008, when these numbers were well into the double digits. So let's go to when Patrick Bet-David hands it off to a counterpart on the podcast, who was a CFO for years, and I think still a CFO today with PBD, somebody who looks at numbers, likes numbers. Let's go to Tom's answer, and this is something that consumers are hearing.
42.4 in Georgia to 43.7 from 46. Tom, what's happening here with these loans?
Here's what's happening. So in certain markets, prices rose really, really fast, like Texas, excuse me, and Florida. In other markets, the houses went up more moderately. Remember that spike we all saw right after COVID? Well, interest rates were jumping up. So in the markets where the prices didn't go up too quick, guess what happened? People went out and bought houses. And this happened in the rural and moderate markets first. That's why we're seeing these stats in Kentucky, Oklahoma, West Virginia, Louisiana, Wyoming. So those people went out and they got 6 3/4 and 7% mortgages. Okay, those are expensive. And now those markets went down. And now those markets have gone down. And now those mortgages are underwater, but they're underwater at higher interest rates. Those people, guess what? Those people may not be able to refi, because what do you need to refi, Adam? You need an appraisal. And if you can't get the appraisal to counter the value of your mortgage, then you're going to be stuck with that 7% mortgage while the value of the home has come down. So basically, the spike we saw after COVID, people went out and bought homes, and not a lot of them, because remember, overall home buying was down. But those that did, now that the prices are retreating, those mortgages are underwater, and the amount of equity overall in mortgages, that's an equity rich mortgage. Oh, my mortgage is only 50% because I have all this equity in my house. That equity is coming down. So we're seeing a moderation of prices.
So unless you listen very carefully there's a couple of locations across the country where some folks might be caught in a pickle, but over 80% of mortgage holders in this country, here's a couple things he failed to say, right? Over 80% of mortgage holders in this country are under 5% mortgage rate. Okay, so very, very low interest rates. 40%, almost 40% of homeowners don't have a mortgage. Okay, so the overall homeowner is in a very strong position. I think it's more the tone, I guess, that I have a problem with. I also have a problem with, we saw basically the spike. He says basically the spike we saw after COVID, people went out and bought homes, and not a lot of them. No, a lot of them did. I mean, when COVID hit, a lot of people went and bought homes. So I don't know if I'm misunderstanding him, or maybe he jumbled his words there, but basically a lot of people bought homes. The last couple of years, as interest rates have gone up, that's where we saw the retreat in home purchases. That's where we've seen the the recession in real estate, where people are not going out and putting purchases together. All right, Tom then clarifies, and this is where I think we can get into some dangerous territory, because when he gives examples like this, it's going to stick in a lot of consumers' mind that this is going to be what happens to homes in the future. So if you can go to where he clarifies his meaning of underwater mortgage, or the meaning of underwater mortgage. Or not, Bobby? Are you going to go there?
Give us one sec. The video is buffering here.
All right. So I can read it. I have the transcript in front of me. You have all this transcript and all this data, this local data, by the way. We put this together every single day for BAMX members. So you've got the link to the pod, you've got the timestamps, you've got all the data, and you had to have more data on this report from Monday's hot sheet show notes on all of these local metros, as well as the transcript here. This is just for segment 1. So you get this every single day, as well as all of the slide downloads from the hot sheet. If you're a BAMX member, you can get into BAMX by using code HOT to get a discount off of BAMX. So when he clarifies his meaning of underwater mortgage, he says, translation, on paper, your down payment is gone. Okay. Good way to look at that, I guess. Say you paid $500,000 for a house. You got it. All right, go ahead. His tone is dramatic. So go with his
translation. On paper, your down payment is gone.
Oh, damn. That's not good.
Like you paid, let's say you paid 500 for a house and put 100 down.
Yes.
Now the house is, and you had a 400 mortgage.
Mm-hmm.
The minute the mortgage is 399, the minute the house is 399, the house is worth $1 less than the mortgage. And on paper, that 100 you put down,
bye-bye.
Yeah.
Wow. No good.
This is the problem I have with people that are buying houses. You think you could just blindly walk into a real estate investment, like, I just became a millionaire. It doesn't work that easy. You know, there's a famous phrase, if it was easy, everyone would do it. It doesn't work that way. Rob, pull up that story about buy now, pay later.
All right. So that might be a good hook for a piece of content to your community. This is the problem I have with people buying houses. And then you come in and say, unless you have this plan that I offer to every single one of my buyers to ensure safety in the home buying process, to ensure that they're securing the right asset. Here's what I do. Here's how we do it. Because listen, a lot of consumers are going to hear that kind of stuff. The guy, Adam, that jumps in, he's a proponent of renting, and he's a Miami guy, renting and dabbling in some crypto and just investing the money, not owning an asset like real estate. So you have all of these voices that are inside of your consumer's head. It's not just Uncle Billy anymore. It's a lot of very smart people. PBD, he wants to have the open discussion on some of this stuff. Maybe PBD should bring some BAM people on, bring me on, and talk about what's really going on in the market. We do this every single day here on the Hot Sheet. Hit the thumbs up if you want to see a BAM PBD collab when they talk about real estate, but they're very negative when they talk about real estate. I think I saw a comment here about watching the podcast with PBD and Tom Ferry. I thought Tom's a friend, obviously, and I didn't think that they did a good job, Tom, having PBD on that podcast. I don't know if you want to put that comment back up, Bobby, that I'm talking about, so I can read the rest of it here. Watched the podcast a year ago. PBD was wrong on every single thing. And so, yeah, he was wrong. I just thought that he was wrong on prices for sure. Where he wasn't, just as going based off of memory, where I don't think he was wrong, is that interest rates are going to be higher for longer. That's one thing the real estate community has pushed hard, is that rates were supposed to be in the 5s right now. We did hit some Walmart pricing yesterday that made me really happy. But yeah, on pricing where, PBD got into, talking about these 10% swings downward on price, he was dead wrong. Prices went up. Now I don't, I don't disagree. I mean, I don't agree fully here, Peter, on he loves to drive fear. I just think that, because I think most of the time he doesn't drive fear on the pod. And obviously I think maybe you probably disagree with that, but I find him to be pretty fair, to be open to discussion. I just think every time I've heard them, and I try to, if I see them talking about real estate, I try to grab that segment and listen. I think every time they've spoken about real estate, that panel, they certainly do drive fear. When it comes to housing, they drive fear, and they don't seem to really fully understand the housing market all that much. Okay. All right. We just got a report in from NAHB Homebuilders. Okay. So their new survey is out. And, speaking of fear, they're a little fearful. Okay. With where mortgage rates average the past 30 days, we've had a great week on mortgage rates. So maybe they'll change tune here going into next month, but with rates averaging more than 7% for the last 4 weeks. And we saw it up in the 7.5 range, really, probably at the time of when the survey was done. Builder sentiment posted its first monthly decline now since November. Okay. The Builder Confidence Index, the NAHB Wells Fargo Housing Market Index for newly built single family homes dropped down to 45 in May. That's a 6-point decline from April. When we were at 51, we would, prefer to be above 50 at all times. Obviously, on Builder Confidence, we'd like to see builders being confident and optimistic about the market and about the future, so they keep building. We don't want to end up in a situation like we were when transactional demand shot through the roof and we didn't have enough homes to meet that demand. End of 2021, beginning of 22, we didn't have enough homes due to the lack of building for the years leading into COVID. So certainly, there's an argument to be made that we may not have enough demand over the next 10 years, or the right demand, and all of those types of things and considerations. So we want builders to be confident. I think builders have been very confident in certain locations. Outside this door, you drive around for 25, 30 minutes, you see the confidence in South Florida. You don't see builder confidence in places like the Northeast. Okay, there's other places that they're not as confident in. They're not really building. They're building in these Sun Belt states. So are they oversupplying in some areas and certainly undersupplying in others? I get it. The expense of being able to produce a great product in some of those markets have pushed them away. But it does seem like, and maybe one of the points that we'd have to give credit to on those underwater mortgages, it does seem like there's an imbalance of where homes are being built. Okay. There's still, trust me, there's a lot of people that live in places like the Northeast or on the coast of the West, right? There's a lot of population that lives there. And we don't seem to be necessarily meeting all of that demand in certain areas. But overall, the confidence is down. The cost and the risk that builders have to take right now has gone up dramatically. So home price reductions for builders is playing a part of this. In May, 25% of builders cut home prices to bolster sales. Okay. That's ending 4 months of consecutive declines in this metric. So that metric has improved a little bit. The average price reduction remains steady at 6% for the 11th straight month. Okay. The use of sales incentives increased, though, to 59% in May. So 6 out of 10 new single-family homes have an incentive wrapped around them to some degree. And, I think some incentives are better than others, right? So 6 out of 10 doing an incentive, some of them are pretty wonky. That's up from 57%. Sales expectations for the next 6 months, that dropped 9 points. Okay. So for the next 6 months, they're expecting less sales. It's something I've talked about. I think we're just going to continue to hover around that 4 million mark on existing homes. And if that's not being pushed up, there's inventory on the new single family homes. So you'd think it'd get pushed up in both directions if there's more demand. If we get the rate to come down, not saying that it will, but if it did, you'd see that expectation go up a little bit. Traffic of prospective home buyers declined 4 points to 30. The regional scores. So the Midwest are at a 49. This is a scale of 0 to 100. Midwest is at 49. The Northeast fell 2 points to 61. The Midwest was an increase of 3 points. The South dropped to 49, and the West dropped 4 points to 43. Again, overall, now sitting at a 45, lowest number since November of 2023 on this report. All right. Here's just a table that shows going all the way back. If we go to 2007, every single month we were below 45. Okay. So the highest month in 2007 was 36. We ended the December at 18. 2008, you don't get above 20 the entire year. 2008, you don't get above 19 on any month. 2010, you don't get above 22 on this metric in any month. 2011, you don't get above 21 until December. And it wasn't until 2012 that you saw a 45. Okay. So November of 2012, 45, that's where we're at today. But we're certainly nowhere near the end of 2006, 2007, 2008, 2009, 2010, 2011 levels. Another indicator that we're just not even close to that type of market. So when Uncle Billy says, wait for the crash, the home price crash, there's a number of data points that, I've got 21 data points of why this isn't 2008. Which one do you want to talk about first, Uncle Billy? We could sit down and have a nice little hot sheet discussion around all of that. All right, let's go and look on what they're actually building right now. There's a residential construction report out. This was just released from the U.S. Census Bureau and U.S. Department of Housing and Urban Development. Okay, so take a look at building permits. Building permits at 1.44 million for April. Housing starts at 1.36 million. Housing completions 1.63. And this is seasonally adjusted. Okay, so that's a seasonally adjusted rate for new construction. Okay, you can see here on the chart that completions for April up, starts up, and permits. I've been calling this one permits down. Why are permits down? That's the future. We just looked at their confidence. The future is a little dimmer for builders right now, just the way they're looking at it. That's going to show up in the permits. I also said as inventory rises, which we've been seeing happen in this country, thankfully, existing home sale inventory rising. As you see that, you will see permits decline. It's 1 month of a decline here, but I expect that to be a trend moving forward, just like we've seen in the multifamily sector. We've seen permits decline considerably because they overbuilt there. And now you're seeing single family housing permits rather decline. Okay, the starts, they got to get these starts going. I'm not surprised that they went up. Like, let's get these done quicker. Completions go up. Let's wrap some of these projects up. Starts and completions are a lagging measurement for me. It's like we've already done the work, the site work for a start. We've pulled we've invested this money. We've committed to the project. We got to start. Okay. Completions, we got to wrap these things up sooner. Let's go. Let's get to the closing table. Let's get that money flowing in. It's the permits that I expect to go down. I do expect this number to continue to go down. Okay. Especially if the confidence score hovers around this 45 or even around the 50 mark, even if it goes up a little bit, because existing home sale inventory is the biggest competitor to these builders. Okay. Anything more on this? We've got a bunch of information. You can dig into this. If you're in a new construction market, you're competing with new construction, your existing homes, or you're working some new construction deals. There's a ton of data here in today's hot sheet. We've got all the charts downloaded for you. So go into BAMX and get the hot sheet show notes. I think that's it for us. Just taking a look at, I think that's it here on that update. Confidence down, permits down, starts and completions up. Okay, not anything too dramatic there. Weekly unemployment, also nothing too dramatic this week, which is good news. Okay, I don't want to see people lose their jobs. I know that the labor market is softening. That seems to be true in every measurement that we look at, but we don't want to see an explosion here on unemployment. In the week ending May 11th, the advanced figure for seasonally adjusted initial claims was 222,000, decrease of 10,000 from the previous week's revised level. Previous week's level was revised up by 1,000 from 231 to 232. So this is running a little bit higher than the low 200s that we saw. The 4-week moving average is 217. That's an increase of 2,500 from the previous week's revised average. So ticking up. We talked about this a bunch. The labor market is starting to soften. And I would guess it continues to soften. We'll take a look. It's still, the data that we have, the data that we're given anyways on jobs, still pretty steady. Okay. But we heard Jerome Powell talk about it. Is the labor market is definitely softened. And the word strong isn't being used really at all anymore. I'll take a look at some of these regional locations with you. Highest insured unemployment rates: Jersey, California, Massachusetts, Rhode Island, Illinois, New York, Alaska, Nevada, Washington, Connecticut, Minnesota. Largest changes in initial claims: New York, Cali, Indiana, Illinois, Texas, and then the largest decreases: Iowa, New Hampshire, Connecticut, Louisiana, and Kentucky. Okay. There you go. I mentioned the Walmart pricing. We had a great day yesterday. I did not go to Walmart, but it felt like we got that Walmart deal, my favorite deal, that 0.99, a 6.99 on the 30-year fixed daily survey to end the day yesterday. Hope is that we'll see that decrease again. We'll get the Freddie Mac 30-year fixed weekly at some point today. That'll come out. It was 7.09 last week. I would guess that to come down a little bit, and 6.99 yesterday on the daily survey. We'll take that from with where we've been. Here's the look at the 10-year over the last 24 hours, ticking up a little bit this morning. What is that in relation to CNBC? Anything? Oh, speaking of Walmart, they're jumping around as earnings were up. I did see this report today. This was interesting. Some data in the market moving CPI report. We covered CPI yesterday, so jump in if you want to know all things about CPI and as it relates to shelter for sure. But some data in the market moving CPI was released early by the Labor Department. Information about Wednesday's critical consumer CPI release circulated a half hour on the Bureau of Labor Statistics. Like, obviously the market moved on this. You know, we saw the 10-year come down. We love that. We're cheering for that with housing because the 30-year follows the 10-year. But, people made money in the stock market yesterday, and this was like released a little bit early. So a little bit of funny business coming out of the United States Department of Labor. People got that information, some of these big investors, and made money off of that. I'm not talking about the GameStop or the AMC Roaring Kitty Bros. I'm talking about big players made money off of this release that the CPI came in and finally wasn't a hot inflation read. So a lot of these numbers are like, I got questions about I'm not sitting here being a conspiracy theorist on the hot sheet. I'm not saying this too often, but I mean, I got questions about some of these labor stats. It feels like a lot of these, people, a lot of people are working 2-3 jobs in this economy. And so they take in the part-time jobs. So how good is that job market? I'm just saying a lot of these numbers here, who knows? I mean, I got a big problem with CPI, with the owner's equivalent rent. Okay. And so anyways, we'll see what happens. We'll see. It's all in the Fed's hands. It's all in Jerome Powell's hands. We'll see what they do coming up here in the future. All right. That's what I've got here for this week. Hope you've enjoyed this week of the hot sheet. If you've never gone down below and just hit subscribe and hit the notification bell, we do this every Monday through Thursday, 6:30 over on the West, 9:30 on the East. Go ahead and hit subscribe. We've got a bunch of content every single week that lives over on this channel on the main video tab. We had an interview with Sharon Srivatsa yesterday that I conducted out in Scottsdale at T3, the Real Word podcast, the walkthrough, as well as other content each and every single week. So go ahead and hit subscribe if you've never done that yet. There it is, the Sharon interview, which I think you'll enjoy if you haven't checked that out. And obviously, tomorrow over at our other channel at Knowledge Brokers Podcast, we'll have a new Knowledge Brokers pod. Last week we had the CEO of Realtor.com. So if you're unfamiliar with that pod, go check that one out as well. BAM is your only place here every single week, delivering you the content you need to be the agent of change, and we are more than happy to do it. I will see you guys soon. Have a great Thursday. Until then, toodaloo.